All right, let's talk Wendy's. Today, we're diving into their fourth quarter earnings, and wow, what a story. At first glance, it seems pretty straightforward. But when you dig in, you find this wild narrative of conflicting numbers, a huge turnaround plan, and a stock that took a complete roller coaster ride. So, what really happened? Let's break it all down. So, you get on the earnings call, and the first thing you hear is the interim CEO, Ken Cook. And he comes out with this very calm, very standard line: our fourth quarter results were in line with our expectations. Now, this is classic playbook stuff, right? It's designed to sound stable and control the story from the get-go. But hang on a second. Whose expectations are we talking about? Because sure, the results might have been in line with their internal goals, but they were definitely not what the market was expecting. And that gap, that disconnect, oh man, that's where all the drama is. Okay, so first up, the headline beat. These are the big, shiny numbers that everyone sees first. And honestly, on the surface, this quarter looked like a home run for Wendy's. It seemed like they were checking all the right boxes. First up, the big one, adjusted earnings per share. Wendy's delivered 16 cents. Wall Street was looking for 14. Boom, that's a beat. In the world of earnings, any beat is a good thing, so chalk one up for the bulls. And the good news kept on coming. Revenue also beat expectations, coming in about 1% higher than predicted. So at this point, you're thinking, okay, an earnings beat and a revenue beat. This is a slam dunk, right? Well, this is where we need to pop the hood and see what's really going on. Because hiding behind those nice, positive headlines was this number. Global system-wide sales were down a staggering 8.3% from the year before. I mean, wow. That is a massive red flag. It tells you that even though the headlines looked good, the fundamental health of the business, it's hurting. Now, to be fair, management knows this is a problem. They're not blind to it, and their answer is this huge, ambitious plan they're calling Project Fresh. This is their big bet, their blueprint for a total rebuild of the company. And this Project Fresh thing isn't just some small tweak. It's got 4 huge pillars. First, they want to jazz up the brand with new marketing and menu items. Second, they're focused on just making the restaurants run better. Third, and this is a biggie, they're going to optimize their footprint, which means closing stores. And fourth, just being smarter with their money. This isn't a fresh coat of paint, it's a full system reset. And let's just stick on that third point for a second, the store closures. We're talking about shutting down 5 to 6% of all U.S. restaurants. That's somewhere between, 240 and 360 locations. It's a really painful move for sure, but the thinking is you have to prune the weak branches to let the whole tree grow stronger. So, what does this mean for you when you walk into a Wendy's? Well, their big new weapon in the value wars is the Biggie Deals platform. The key here is that instead of random, short-term discounts, this is a permanent value menu with tiers at $4, $6, and $8. They're trying to offer consistent, everyday value to win people back. So just to recap, we've got a weak quarter that was masked by a headline beat, and we have a huge, complicated turnaround plan. But the real bombshell, the thing that truly sent shockwaves through the market, came when they started talking about the future. And just look at this. It says it all. The company guided for earnings between 56 and 60 cents a share for the next year. You know what Wall Street was expecting? Around 85 cents. That is not a gap, my friends. That is a canyon, a nearly 30% miss. It's what we call a guidance cliff, for a reason. And the bad news didn't stop with earnings. Management basically said to expect flat sales growth for the whole year, and they guided down on profitability and cash flow too. The message to investors was loud and clear. Buckle up because 2026 is going to be a painful, expensive rebuilding year. So terrible underlying sales, a shocking guidance cut. You're probably thinking the stock got absolutely destroyed, right? Well, this is where the story gets really, really weird. Let's look at what actually happened on earnings day. Okay, so check this out. The call begins at 8:30 a.m. and bam, the stock tanks almost 7% in pre-market trading. Totally what you'd expect. But then at 9:30, the market opens and it starts climbing back. By the time the closing bell rang at 4 p.m., the stock was actually up almost 3% for the day, a complete 180. And this wasn't just a quiet little drift upward on low volume. No way. Look at this. Trading volume exploded to nearly 3 times its daily average. This tells you there was a massive debate happening in the market, a huge battle between the bulls and the bears, with tons of shares changing hands. So what on earth is going on here? How do you explain that reversal?
Well, it seems the market came to a really interesting conclusion. It's like they collectively said, you know what? We already knew things were bad. The terrible news was already baked into the stock price. So even though the guidance was awful, management also gave them a clear, credible plan to fix things. And for investors, a painful plan was better than no plan at all.
So that all leads to the billion-dollar question. Where does Wendy's go from here? For our last section, let's look ahead. This is the next call, our official Talk Tickers rating and analysis. All right, here's our take. For the next quarter, we think comparable sales will still be negative, but we're hoping to see some improvement as those Biggie Deals start to catch on. For the stock, expect a bumpy ride. It's going to be caught in this tug of war between hope for the turnaround and the hard reality of making it happen. All of this leads us to our official rating, Market Perform. Look, the plan sounds good, but turnarounds are incredibly difficult. So for now, we're on the sidelines, waiting to see some proof that Project Fresh is actually working. So in the end, it all comes down to one simple word: execution. Can management actually pull this off? Can they make the tough cuts, reignite the brand, and win back customers in this crazy competitive market? The market has placed its bet, but the real story is going to unfold one quarter at a time. And as always, just a quick reminder, this is not financial advice.